Syria closes airspace until 3 p.m. local time. Sana.
This is the Daily Market Rundown live from the Tradelo trading floor. It's June the 13th. Some highlights from today's show. Israel strikes Iran, bond markets are selling off, and the Michigan data is now in focus. Good day, traders, and welcome to the Daily Market Rundown. It is Friday, and let's get stuck straight into it. We, of course, do have a lot of risk event going on at the moment with the attacks from Israel onto Iran. Let's get into it and talk about our first topic for today. And it's very much come overnight in the early hours of London around 2 a.m. Where Israel has attacked Iran. Now, again, whilst I don't want to say this is not surprising, I suppose it's somewhat surprising given the President of the United States said yesterday that an imminent attack is not likely. Now, again, I did post this on Twitter yesterday, but it does seem as though we do have to actually start taking the President of the United States very literally, because he does seem to be forewarning us on a number of things, including this attack. So again, just something to learn is that, when there are sort of risk events, that to be aware of when Trump says things with a great degree of conviction, we do need to pay attention to it. Now, very, very important, of course, we've had the initial strike. Seemingly the strike has been perhaps more geared towards taking out key figureheads within Iran's chain of command. Seemingly they are going after the people that make the key decisions. I think that's perhaps the best way to term it. Now, in terms of ultimately the what comes next, we do know that Iran has cancelled the meeting for Sunday in Oman. Okay, now that matters because obviously this was going to be the 6th round of talks where there was hope that perhaps Iran would sign and agree to the terms set out by the United States. Now, what's key today is Iran has said they will not go to those talks on Sunday. We also know the president of Iran has come out and said that he will make a speech in the coming hours. Now, we haven't yet had that speech, and we don't fully know what the attack plans
absorption candle
Iran are going to be. What we do know to be true is that Israel's confirmed that there's likely to be some form of a missile barrage coming from Iran. But again, this is what we know. This is kind of the real-time news. What's important now, and I think I'm going to just go on to the next slide to stress it, I think we can understand the playbook when we look at Trump's very early truth truth post that he put out. What he's ultimately saying is the following. He says, look, Iran, I gave you a chance. I've given you quite a number of months, almost a year now, to come to the table and agree for non-nuclear proliferation. In other words, stop stockpiling uranium to build bombs. Okay, that's ultimately what he's saying. He's then gone on to say, look, it's time to make a deal. And make a deal, otherwise, and this is the key, otherwise, guess what? We are going to attack and it's going to be even more brutal. And I think this is the playbook. It's very much understanding now that this is it. The message has been sent and the message is loud and clear, which is you sign on Sunday, you get it done, signature done, you agree to what we're saying. Otherwise, we are going to escalate, we're going to make it more aggressive, and we're going to just keep going until you sign the deal. And I think that is the playbook now. It's very much sign the deal, otherwise we shoot. Okay. Now, what that means ultimately is we have got very much extreme event risk to be switched on for. And there's a number of things I think to pay attention for. We need to understand what Iran's response is going to be. In other words, we need to understand what is the likelihood, what is the probability that they are going to sign this deal. Okay. If it's tending towards zero or not happening this weekend, then yes, absolutely, you want to be looking for risk-off plays into the weekend. But if the rhetoric shifts, if all of a sudden Iran comes out and says, look, we will attend the talks in Oman over the week. In other words, there's some form of de-escalation, any form of de-escalation. Okay, what we are going to see is we're going to see oil trade pretty much unchanged on the day. We're going to see gold give back a lot of that risk off that it has currently in the bid this morning. Okay, that's the key takeaway. It's very much now about what is Iran's response, what is the probability of de-escalation into the weekend, and of course we don't yet know what Iran's response is. If they're going to fire off a whole bunch of missiles in the near term, in other words, at some point today or early tomorrow morning, the reality is that we're not going to get anything signed over the weekend. Okay, so that's the key takeaway. It's very much a fluid situation. It's very much watching the news headlines, and that's the only thing that matters. Okay, it doesn't matter now your technical levels. None of that stuff matters except for what is that rhetoric coming from Iran? Are they going to shoot missiles? Are they going to attend the meeting on Sunday or not? Okay, the next move comes from Iran. It doesn't come from Israel. It doesn't come from the US, because President Trump has told us exactly how this is going to play out. Now, what is key is, of course, we can see gold's up $40 on the day. We can see oil's up $6 on the day. We can see ultimately the S&P is down 68. So there is risk off in the markets. We can see it across the board. But I think this is quite alarming, and I think this is a very, very important clue ultimately, is that we can actually see that the bond markets, okay, are all down on the day. Down. Bond markets are down. Even European bonds. Okay, and this is key, because what this is telling us is the bonds are seeing this more from the inflationary standpoint as opposed to the risk-off standpoint. Now, that's quite scary, okay? For a trader that's been doing this for 14, 15 years, it's very unusual to see bond markets sell off with a risk event like this. Okay, and I say it's a risk event because gold is still up $40, S&P is still down 70 handles, over 1% on the day. Okay, so again, what this means ultimately is that bonds are responding to the higher inflation impact. And just on that note, if this is going to be a prolonged war, okay, if this is going to play out over the course of the next couple of weeks, months, years, the reality is that, yes, this has got significant implications for long bonds, because ultimately we are going to see the inflationary impact of higher oil prices. Okay, so again, we're not expecting a protracted long end war. What we're expecting is Iran to come to the table and sign. That's what the market's leaning into now, is this idea that we've got these bully tactics from the allies, which is sign the damn deal, otherwise we're going to just, as Trump says, more brutal shooting. Okay, now, there is the oil market. I think what's key to take away from this is that the risk premium is now perhaps priced. Now, sure, we can, of course, price a lot more. Do they close the Strait of Hormuz? Possible, of course. They could threaten it, of course. But the reality is we're up 20% in 4 days. Okay, you can see that breakout occurred, effectively started on Thursday, Friday last week, and it sustained itself over the course of the last 4 sessions. We're up 20%. Okay, so it is pricing quite a significant degree of risk premium, and so what we need is further escalation to perhaps get us closer towards that $80 a level barrel. But right now, it is very much a market that's going to be very volatile, very fluid. In terms of support, well, 72.5, I suppose, if I'm going to draw a line somewhere. And of course, we have got, of course, today's highs around that 78. So it's a wide range. But like I said, it's not so much about the technicals now. It's just about the flow of information and ultimately the probabilities of, like I said, escalation versus de-escalation. Now, moving on to perhaps the key data for today, we have got the Michigan data coming out. And this is pretty much a data point that, you know, had you asked me a couple of months ago, does it matter? I would say yes. But perhaps it just doesn't really trade or interest the markets all that much, simply because Chairman Powell has told us that the correlation between the soft data and the hard data is just not there. Okay, in other words, he doesn't seem to think that the soft data leads to any implications for the hard data, and until they do see it, they're not going to assign too much concern to it. They do watch it, of course, because it is consumer sentiment and the consumer drives US growth. But I think the key takeaway for this is that, you know, we know last month we had one of the lowest prints on record of the actual survey. Today we're effectively, going to look to print a little bit of a higher print around 54, so somewhere up here, but a number sub 50 or below 50. Again, in this sort of environment where the market's a little bit nervous, S&P's already down, don't be surprised to see it create a tradable opportunity. Okay, if it was any other day, if it was yesterday this came out, I'd said, yeah, it's probably a non-event. But given that the market's a little bit sensitive, a little bit risk off already, if we do get a sub 50 number, don't be surprised. It's just a little bit of nervousness in the equity markets. And then, of course, note the trend. Okay, we've had 3 big misses in the Michigan index over the last 3 months. So it is a survey that's really pointing to a consumer that's not looking good. Okay, now again, like I said, Does it matter? Well, it doesn't seem to be filtering into the hard data, so perhaps not. But of course, doesn't mean we won't pay attention to it anyways. Now, with that in mind, of course, we can see the S&P 500. It did break below that key 50, let's call it 6,000. It's a very important spot in the market now. Okay, I think it's one of those plays where I do think we'll test it in the cash session, and ultimately, once we get above it, be very, very careful being short. Okay, and I'll show you why in a moment. But above 6,000, we are going to make our way and squeeze our way back up to that 60.35. Like I said, today is not so much about the technicals, it's about the flow of escalation versus de-escalation. If we start to see a little bit of de-escalation, ultimately we are going to get that S&P trading back to unchanged, and of course back up towards that 60.35. To the downside, well, look, we know that 5,900 is a massive level. There's some massive options hedging taking place there, and to get below that point in the near term, I suspect we are going to struggle. Why? Well, don't forget we were trading 60.75 on CPI day earlier this week. Should we get back down to 5,900, that's quite a significant retracement in a short space of time off of really, I don't want to say nothing, okay, this is not nothing news in the Middle East. It is relevant, it is important, but history suggests that these things sort of escalate and de-escalate very rapidly, and so I'm not sure big institutional players are going to panic yet. We will see some hedging, of course, hence why the VIX is a little bit higher today, but I'm not sure it's going to be all out panic stations, sell everything, until we get a little bit more clarification about whether or not this is going to be prolonged war in the Middle East. Now, with that in mind, of course, in terms of some of the options flow, I think the key level to pay attention to is, like I said, it's that 59.75, 80. It's somewhere around this 59.92 on the futures. We get above there, what you can see is the profile starts to look like a little bit of a squeeze in terms of the gamma. We are going to see those dealers just buy up out of the futures, forced to buy the futures and run us up until that sort of 6,000 level, 6,030 level. So again, I think a little bit of hedging does come in around that 6,030, and the fact that there's not much gamma between sort of 59.80s and 60.30 suggests that there's not going to be anything standing in the way of the market floating its way back up to that 60.30. Okay, and that's why technically, like I said, you get above 6,000, all of this is pretty much going to be taken out. We're probably going to have a whole bunch of shorts being squeezed out of the market, and we are going to trade back up towards that 60.30 level. So keep an eye on that. It is a very good play for today. I think it's probably the play of the day, and so I will be keeping a very close eye on that. With that in mind, things are fluid. Watch the Discord channel very, very closely. I will be posting quite a few things in there. Keep a close eye on the news wires, because like I said, it's all about de-escalation versus escalation today. That is the theme for the session. Then of course, vol is a little bit higher, and I want to stress that it's not a lot higher, it's a little bit higher. So yes, the markets will move a little bit more freely, but don't forget, it's going to be all about that news flow. So make sure you manage that risk, and then of course, good luck out there. Manage that risk, go make some money.